Two of my favorite stocks in the stock market. Number one here, Uber. Uber's up just over 10% in the last year, up about 170% in the last 5 years. So you're definitely not getting this one at a cheap valuation, market cap around $200 billion. This one is expected to do about $3 of earnings per share. So we're trading around 31 times earnings here. But even just looking back a few months, was trading just over 60, so closer to 20, 21 times. I still think at 30 times, this one is not a bad valuation. If I compare to some companies trading 40, 50, 55 times earnings, they've been growing their revenue here double digits year over year over year. They've been expanding free cash flows 20 to 30% a year. And they've just been exploding across all of the profitability pillars of their business, whether that's their Uber One subscription, which is getting much better attach of Uber Eats consumers, whether it is advertising, which is now over $1 billion business a year, which is a profit cash cow for them, very low cost to serve that. Lots of that flows to the bottom line. And now they're actually buying back a lot of shares as well, just because they don't even know what to do and where to invest all the cash that they're generating on a quarterly basis. So really like this one. I think the multiple has been dragged down despite their growth rates due to some concern on the robo-taxi networks being launched, Tesla, Amazon, Waymo kind of playing both sides of the fence. But I honestly think they've just created such a powerful aggregator of ride-sharing demand that lots of these companies launching with robo-taxis with super high capexes will need to partner with them to kind of get to the utility levels required to pay back that capex. Uber is also super profitable. If they needed to pull some profit levers, offer discounts and stuff like that to defend share, I think that they could do that effectively and still hold a lot of value within the company. The next stock here is Airbnb, down about 11% in the last quarter. In the last 5 years, down even, just because this one launched at such a hot price during the pandemic. But just looking at the current valuation, trading at about 29 times current earnings here. This one too, buying back shares. They're generating a lot of free cash flow, super asset light business. Unlike hotel companies, if there's the Olympics or a big event somewhere, they don't need to invest money in acquiring new hotel partners or helping to finance hotels in the ground. They get essentially free supply from lots of the people living in those areas looking to make additional income. They do have some regulation issues on a city by city basis, but generally speaking, the world's their oyster in terms of where they can unlock supply. And in addition to that, they're taking that free cash flow, in addition to buying back stock, investing in growth businesses like experiences. I don't know, over the next 6, 12, 18 months, how that'll